Welcome to the live stream, everybody. Things are getting spicy out there. We're experiencing a weekly close. We're about an hour away from this week's close in Bitcoin. We're going to dive into the charts in just a moment. And it's not what I was hoping to see for this weekly close. Market demand's just really, really low. I think a lot of people are just on the sidelines waiting for some sort of change in fiscal policy from the Federal Reserve and the global money supply overall. And as a result of waiting, the demand is low. So let's dive into it. Let's not waste any time. Let's dive into the king of all crypto. That is Bitcoin. So here's the weekly close that we're talking about right here. I was wanting us to hold the level of this doji right here. So the open and close of this doji was kind of the level that I wanted to see us hold on this week's candle. It could close above. We still have an hour's worth of price action in this candle, and it doesn't have that far to move. But any close below... any close below 58.7, currently at 57.5, is not a great indicator because we have a bearish engulfing candle on the candle prior. We are still looking at this as a bullish consolidation. It is a bullish flag on the higher time frames, but that doesn't mean that we can't come down and revisit the lower end of the flag. So that could potentially bring us down to this level right here, kind of revisit the lows around here in line with this low right here. Let's actually put the support line on there. So kind of this general range, this liquidity zone right here. Anywhere between 53 and 51,000, with honestly a wick being able to pierce through that as the liquidity is tested below that zone. Let's go down to the daily chart. And yeah, this is what, with this close, it's less than ideal. It's probably signaling a little bit of a liquidity test. So we're coming down to kind of this range to retest before reclaiming some of the levels and finally breaking out above the upper end of the range. We've been saying on the channel for quite some time that we're expecting a pivot in the bullishness of price action to occur somewhere in September. There is anticipation that September will be the beginning of quantitative easing, or at least a lot of money printing as the Fed begins to cut rates. Let's take a look at that projection over here. So on September 18th, there's a meeting, and the expectation as it stands right now is currently divided, but anywhere between 475, not basis points, whatever, I guess 47.5 basis points between 47.5 basis points and 52.5 basis points is expected, with more people expecting a higher cut. But the important thing to note here is this represents a shift. As you can see, there is cuts expected throughout. Global money supply is a cyclical thing. It's a, let's go over here. We can see that Bitcoin's price action is very correlated to the growth of the overall money supply. We hear it all the time. Money printer go burr. Money printer go burr. Bitcoin price goes up. And what that can be, you can take that meme and you can dissect it a little bit more sophisticated, I suppose, by observing the price cycles or observing the money supply cycles of the M2 money supply, which is the overall growth of all of the central banks issuing new currency. And you can see that anytime this is in an uptrend, it correlates with a bull market in Bitcoin. Here is the bear market low of Bitcoin. Here is the bull market high. You can see that during that entire period, you had an expansion of the money supply. Back here as well, you can see, the low of the bear market correlates with the low of the money supply cycle. And as that pivots to an uptrend, it carried the bull market basically to the top of the 2017 bull market. 2017 bull market was very overheated by the end when we, went from 10K to 20K in a matter of a week. So the money supply was actually still increasing as the top came in. So take that into consideration, depending on, the velocity of the upcoming cycle. But yeah, as soon as the money supply contracted, that's what put us into a bear market. So Bitcoin's price is very heavily correlated with these ebbs and flows of money and how much money is out there. How hard is the money printer printing? Money printer go burr, Bitcoin price go up. And what we're seeing here is we have the lows of the money printer correlating with the lows of Bitcoin, and that has been in an uptrend. That uptrend is going to continue until we get at least some sort of a money supply bubble that we've seen in prior cycles. It's a cyclical thing. It happens every 4 or 5 years, correlated with Bitcoin's halving cycle. They're not connected, obviously, but they are correlated just in terms of timing. But we're still in an uptrend. We're still in an uptrend on money supply. So I'm not worried at all. A lot of people are speculating that this might be the end of the bull market, that 73K was the top and that's it. You're done. No more bull market. When you look at some of the on-chain analytics and when you look at the fundamentals of the money cycles, I don't see a lot of information that kind of supports that theory. It's a fear-based theory. It's people just doubting their positions. And it primarily comes from anybody who is holding an altcoin position that accounts for more than 50% of their overall portfolio. If your investments are more than 50% altcoins, of course you think we're in a bear market. How could you not think we're in a bear market? The alts have not shown any performance whatsoever comparatively to Bitcoin. Bitcoin's been doing its normal stuff. This is still a consolidation. This isn't a breakdown just yet. Bitcoin's just consolidating. It had a beautiful run up in the context of money printing. And if there's one thing I know about governments, they love to print money, and they're not going to stop printing money. In fact, for the entire existence of the fiat system, until the fiat system collapses, we can expect that governments will not be able to help themselves and they will continue to print money. So based on that one fundamental statement, we can assume that there's plenty of bull market ahead of us. The cycle of that, by the way, is expected to go well into September of 2025. You can see all of the cuts that are kind of expected in the coming months. So basically, we have at least a year ahead of us of basis point cuts, which means money is cheap. They print more money. A lot of people think that the Federal Reserve is actually setting the rates. They're not setting the rates. What the Federal Reserve does is it tries to influence the rates by printing money. When it prints money, rates come down. When it constricts the money supply, rates go up. So with their targets that they're talking about here of basis cuts, they're not the ones in control of the cuts. They're in control of the money printer. So these are more targets than anything. If it was a set cut, they would put a set rate, but they don't. They have their targets. And how they achieve those targets is with inflation of the money supply. Let's take a look at, speaking of altcoins, let's see how we're doing on the Bitcoin dominance side. Bitcoin dominance continuing to climb. If you've been an altcoin investor this cycle, it's been a whirlwind. It's been a whirlwind depending on when you got in. If you got in early, you've experienced really incredible gains, specifically in some of the outlier assets like Solana, Caspa, Immutable X. There's certain outliers that have been doing really, really well this cycle. But overall, most of the altcoin market has not been experiencing that. So you might have seen, paper gains and fiat value, but you haven't seen real outperformance of the alts when compared to Bitcoin on Bitcoin standards. So, a good example of that is Litecoin BTC. Litecoin BTC has just been an abysmal, terrible, terrible chart. You do not want to have exposure to Litecoin during any of this cycle. It's just, it's ridiculous. Relentless downtrend in Litecoin. Another really popular one is Cardano BTC. Same story. We're basically back revisiting the lows of 2019. So massive retracement here in Cardano. XRP. If you're an XRP hodler, I don't know. You probably don't follow me. Right back down to the lows of 2017. Really, honestly, embarrassing price action. So we haven't seen the outperformance. We haven't seen these big moves up in any of the kind of bigger altcoins, and that's in part, as a result of what we're seeing with this chart, which is the dominance of Bitcoin in this market thus far. All right, let's take a look at the S&P. The market has so much more of an appetite for the traditional financial markets right now. Cryptocurrency is very niche. It's very risk on. So we can't exactly be surprised when we see, with all the fear that's in the markets these days, it's not a surprise that you're going to see these recoveries and this bullish sentiment towards what are considered the safer investments. So S&P 500, it's damn near ready to break out into its all-time highs. NASDAQ, very similar story, just trailing lightly below or behind the S&P. But yeah, it's, the market does have an appetite for risk. So it's just a matter of making the money cheap. Once we make the money cheap and we flood the system with more of those fiat dollars, Bitcoin's going to do what Bitcoin's going to do, and that's rise and hedge against inflation. That is what it's designed to do. All right, let's see what we got going on in chat here. My chat doesn't seem to be syncing up. If you guys are interested in joining the Discord, we are very, very active in the Discord. I've been away. We've had a few events here in Bali. I've had a few people visit as a result of that event. We just had CoinFest, big Web3 convention that occupied a lot of my time. So I was unable to do a live stream, but that doesn't mean that I'm not offering content. So if you aren't already in the Discord, scan the QR code, get into the group today. And then beyond that as well, get a account set up at blackbox.pro. We are relaunching our scalping bot, hoping to have that done this week. This week that will be back up and running, and we'll start, capturing some of these moves. We haven't had too many signals. I think we've had one signal since the bot went down. So not a huge loss, and we're coming back with that as well. So sign up for free, takes 2 seconds. Get into the Discord, also takes 2 seconds. If you don't have a Discord account, what are you doing? If you haven't made money in crypto and you don't have a Discord account, that might be why. Some of the most valuable information that you can find in these markets is in Discord and Telegram. In my opinion, Discord gives you better alpha. Some of the smarter people in the space have a preference for Discord because of the way it's laid out and organized. It's very heavy on information, whereas Telegram is more like signals and, very up-to-date current thoughts. Nice soda water. This isn't beer. This is soda water from Polkadot. Polkadot can't make a shitcoin, but they can make a soda water. So thank you, Polkadot. Spoils of war from the fest. All right. Blackbot chat is very good. JT is often here. You can ask anything. Thank you, Red Panda. As we're so intimate tonight, it's 1:20 a.m. here. I'll profit to say thank you, JT. Where is it 1:20? I know I'm in a favorable time zone for the North American crowd, so you must be in Europe. Just waiting for the bot to come back online. Yeah. All right, let's take a look at some other charts. Gold finally breaking above the trend line. Gold's looking a little sneaky bullish. Gold is sneaky bullish, which is the kind of bullish I like. Not a lot of people talking about gold, which is what you want if you want to see a big price advance. But gold, keep it simple. High, higher low, higher high, higher low, higher high, higher low, higher high. It's trending in the right direction. It's interesting to see the bullishness of gold in the face of the bullishness of the S&P and the NASDAQ. Usually those two, they're not inversely correlated per se, but the S&P and the NASDAQ represent a risk-on environment, whereas gold traditionally represents a risk-off environment. So it's interesting to see that gold is trending up while those are breaking all-time highs. We just had an all-time high here in gold. Let's take a look at the DXY. DXY came back down to the bottom end of the range, now rallying off, which is not what we want to see in risk-off assets. So we do need to keep an eye out for this one here. Lots changed since we streamed last. The mid part of the range, we could rally up there. A rally up to the mean of this parallel channel is not going to be a favorable environment, as that is indicating that money is not cheap. Assets only go up when money is cheap. So we do want to see a little bit of a correction. Let's say we get up to the midpoint. I would love to see us come back down. And I would really love to see us actually break the structure, because if we break the structure, well, now we need to reprice the entire market. And considering the fact that we are expecting, 12 to 16 months of cuts and cheap money, I wouldn't be surprised for us to break this structure in the coming weeks to months and kick off the bull market. Bitcoin to 45K. That's not going to be my target. My target is going to be a revisit of the lower end of this trading range. We're in this descending, broadening wedge formation. So I'd be looking right around, 52, 53, 53.5 to 51.5. We could certainly wick down to 50s, but saying that we're going to go down to 45, it's not impossible. I just weigh it lower on the probable. I don't think that that's probable. It's much more probable that we come down and visit this lower end of this trading range that we're established in. If we break below that, then absolutely 45 is possible. And in that case, I would even say that 40K is possible. But the really unfortunate thing that goes along with that is it will also add a few months of consolidation to this already painful chop solidation that we're in. We need to close weekly above 58.4. Yeah, we need to close the weekly above 58.4. It's not looking likely. It's not looking like that's going to happen in the next 35 minutes, but anything can happen. 35 minutes, it's not far. It doesn't have to go far. It only needs to rally up 2.5%. 2.5% will give us a solid close. And if that ends up being the case, then the revisit of the lower range becomes the less probable outcome. And the higher probability outcome is that we actually hold this support level and give a shot at breaking the upper end of the range. So that's not off the table yet. This probability becomes a lot less likely in about 35 minutes. So 35 minutes till the weekly close. If we close below this level, then it's likely that we come back down and revisit the lower end of the channel. But if we can turn things around in the short term, which Bitcoin totally can do, and close above, then we have a higher probability of trending higher inside of this consolidation. That's the thing. We're in the middle of the consolidation. So depending on how price action plays out and depending on how the high time frame candles close, will determine our bias. Right now in the middle, it's kind of no man's land. I wouldn't be comfortable going long. I wouldn't be comfortable going short until we can get some confirmation bias coming in from the higher time frame candles. There's a lot of expectation around rate cuts in September. Do you think the first rate cut of 25 or 50 basis points will move the market needle? Absolutely, because what it signals, I think 50 basis points would be a really good signal because it's very rare that you get the 50 basis point signal. What that represents is the money printers kicking on. The Fed doesn't move quickly with anything. So if they start to turn the money printer on, they're going to they intend to keep it on for a while. At least a 6-month period, more likely a year, where they taper off of the money printing. But with a signal like that coming into the market on September 18th, we could absolutely see, we could see something like that. We could see a 50 basis point cut. And that cut represents money printing. I feel like it's going to be a sell the news event for speculation. It could be sell the news. There are a lot of people talking about it, but sell the news events are usually quite short. It doesn't change the fundamentals of what's happening. And the fundamentals of what's happening is the money printers turning back on and the global money supply is increasing. And the global money supply is heading into the trend of an increase. Alts bleeding, disgusting. Alts are always bleeding, man. Until the altcoin dominance goes down, alts bleed. I summon Mr. 100 to buy before the end of the day. All right, let's take a look at the total market cap and see what we can see there. Total might give us a clearer picture. Again, money supply is really important to take into overall bullishness of the entire market, but we might get some clues looking at total 2, and total 3 as to where we stand in any sort of rotation into the alts. There has not been a rotation into alts. If anybody has said, oh, they're, smart money's buying ETH or smart money's doing this or smart money's doing that, they're not. They're not. It's we haven't seen that rotation just yet. So we could be looking here. What we would like to see is this level hold. So if Bitcoin in the next 30 minutes can manage to rally up to that 58.5 level, then this actually is a pretty nice inverse head and shoulders that we're seeing right here. An inverse head and shoulders, by the way, is just simply a trend change. You have a low, you have a lower low, and then you have a confirmed higher low. Once you have a trend change, you have the option for trend continuation. So if you have that higher low and then we come up and print a higher high, well, now we have a trend change. That's all a inverse head and shoulders or a head and shoulders represents. It represents a change in the trend direction. represents a change from down to up. Let's overlay total 2 and total 3. Let's put a year in frame. And we can see that total, which is the total cryptocurrency market cap, including Bitcoin, is still the dominant player. So in the last year, if you had a perfect index, a perfectly weighted index of all the cryptos in the entire market, which is ridiculous, there's thousands of them, but you would be up 91%. And the bulk of what would be doing the carrying of your account is Bitcoin. And we can see that very clearly when we add Bitcoin. Yeah. So Bitcoin on its own is at 122% this year. Bitcoin in a basket of macro altcoins has yielded you a 91% increase in the year. If you didn't hold any Bitcoin and you were heavy Ethereum, actually, no, if you didn't hold any Bitcoin and you were heavy Solana, you'd be looking at 69%. And if you were heavy in Ethereum, you're at 61%. So total 2 is still lagging behind total 3, which has been very, very interesting to observe this cycle. Typically speaking, you can look at these almost as moving averages. These prices can be looked at as moving averages. When you're in bullish alignment, Bitcoin bullish alignment, you got Bitcoin, total 1, total 2, total 3. And then when it's altcoin season, you have total 3, total 2, total 1, Bitcoin. So they're kind of like moving averages where you get that flip. We haven't seen that flip yet. But what's been very interesting this cycle is you have Bitcoin, total 3, and then total 2. So total 2 is kind of, Ethereum is really skewing the data. And we've talked about Ethereum ad nauseum, and it's not been a great chart to look at. A lot of people from the previous cycle were following me because I was so bullish on Ethereum. And then when Ethereum went to proof of stake, I became very, very bearish on Ethereum. So a lot of my community members have probably struggled with the fact that I've been so bullish on Ethereum. And then this cycle have been relentlessly bearish on Ethereum. And, it hasn't been the wrong thesis. It has not been the wrong thesis to follow. 50 basis points would scare markets that the Fed has made a mistake and a recession is coming. Feels like BTC is showing it, a recession is coming. That's an interesting take. That's an interesting take. In my opinion, if we take into consideration the closing of this week, it's a rejection from the 2021 levels. Okay, let's take a look. So we're talking this area right here. Yeah, I see what you're saying. I see what you're saying. So yeah, we could get, a little bit of rejection, but ultimately this consolidation is bullish to me. But yeah, good observation. Good observation. The cycle's not over. The cycle's not over. And it's hard for me to sit here and just say that because a lot of people are new and they might have come in last cycle. They don't have the confidence that I have or any of the other traders have that have been in Bitcoin for multiple cycles. But it's highly correlated to the money printer. And we haven't gone through a money printing cycle just yet. So when you look at some of the on-chain analytics, and I'm sorry that I don't have any of those queued up, ready to go, we show no signs of profit taking. Another characteristic, okay, let me put it to you this way. We have the supply of money growing, okay? That alone can influence the market in a positive direction. Bitcoin is highly correlated to the activity of the money printer. Money printer go burr. But the second thing to take note of that ends a bull market, that ends a bullish Bitcoin price cycle, is long-term holders selling en masse. You see it in the on-chain data. I'm sorry I don't have anything queued up. But yeah, I just don't have anything queued up. I've done previous shows. You can go back a few shows where I do talk about the on-chain analytics. Go and check those out if you want a further explanation. But when the long-term holders sell, the people that bought Bitcoin really low and like the 20K range or whatever in the previous cycle in the 5K range, once we get up to 6, they start to sell. And you see it in the on-chain analytics. You see a huge influx of volume. And it's what we've seen thus far this cycle is not even 10% of something that would indicate a market cycle ending. So, you know, if it was 50%, sure. Okay, I could get on board with believing that so much supply has hit the market that we could have a bear market. But if 10%, less than 10% of the supply from the holders, the hodlers, has been, you know, put onto the market, that's just simple profit taking. The price cycle hasn't concluded yet. So for me, you know, I'm still expecting ridiculous numbers, anywhere from $250,000 to $1.2 million this cycle for the price of Bitcoin. I know that sounds fucking crazy, and it borderline discredits my ability to do analysis because it's so inconceivable for people. When they hear that, they think I don't know what I'm talking about. But there are very interesting things that are happening this cycle that are going to affect the price of Bitcoin in the context of the money printing. And I'm going to have to do a whole show on it. So if you're not already subscribe to the channel, click on the bell notification, because this is a very good topic and I'm going to do a refresher. The biggest thing that's different about this cycle is that the available supply on exchanges, meaning the Bitcoin that's actually out there for somebody to purchase, has never been lower, and it's in a decline. So there's never been so few coins actually on the market available for purchase in any cycle period. There has never been such a small portion of Bitcoin available for purchase, which means if we had the exact same amount of liquidity that came in last cycle before the FTX collapse and all of that, you know, nonsense and, you know, forgeries of the books and stifling of Bitcoin demand. If we have the exact same amount of capital come into the market this cycle as it did last cycle, which I actually think we're going to see more capital inflows because every cycle sees more capital inflows. If we have the exact same amount, that brings the price of Bitcoin to $400,000 to $500,000 with just the same amount of liquidity as last cycle. Again, I think we're going to get more. And I think the effects of that are going to be more powerful because there was more Bitcoin available for purchase then than there is now. When something is in short supply and there is an increased amount of demand, that's how you get green candles. That's how the price goes up, because the book is not level. It needs to have higher jumps and higher liquidity, higher price gaps between the actual orders and deals happening. Long story short, I'm not worried. I am not worried in the slightest. Not in the slightest. Can you chart Bitcoin USD M2SL. I'm wondering if it looks like a giant cup and handle that has yet to break out. Okay. BTC USD. Divided by M2 supply. Did I do that right? Had to press enter. So giant cup and handle, not for, so I'm kind of picky about cup and handles, if I'm going to be honest with you. A cup and handle to me is a bottoming pattern. The argument could be made that you can see cup and handles in uptrends, but for me, it represents a bottoming pattern. And maybe that's just because of my programming coming from the Wyckoff perspective. A cup and handle is one of the styles of a Wyckoff accumulation. And so for me, this is we already had the cup and handle. This is the cup and handle down here. And what a cup and handle represents is the oversold condition coming up and retesting the support/resistance flip, getting a rejection, and then getting a breakout. So for me, this is the breakout of the cup and handle. What you're trying to determine is this kind of a much larger cup and handle? And to me, based on my bias and what I expect and the time duration for that expectation, I expect this to be a quicker recovery. So I guess in a sense you could make the argument, but typically speaking, a cup and handle goes down lower and it takes a lot longer to break out. So I'm expecting something pretty short and sweet. Could be wrong, but yeah, if it is a cup and handle, what does that bring us to? Let's actually just go over to normal Bitcoin for a sec. What kind of conservative price estimate would that bring us? $128. That'll be the first move. 120, 128. When this thing breaks out, it's going to 100K like instantly. A lot of people, you know, even my show talking about 100K Bitcoin by September, that's still possible. The thing about Bitcoin is when it moves so fast. It spends most of its time trading sideways. Bitcoin spends most of its time doing nothing, doing a big chop consolidation range. That's what Bitcoin does most of the time. And then every once in a while, you get these big, massive moves that are quick, that happen in a matter of days to weeks. So I still think, you know, it's less probable. I'm less confident when I put that video. I'm less confident today than when I put that video out, for sure. Credit where, you know, I gotta at least say that. But I also think it's not impossible for us to still reach 100K by the end of September. I do think that is a possibility. When Bitcoin breaks out here, when it gets above its new all-time high, it's just going to fuck off. And it's going to leave a lot of people behind, because that's what Bitcoin does. It leaves a lot of people behind. I think some of the biggest moves in Bitcoin happened in a matter of 20 days from the last cycle. So that means if you weren't already in Bitcoin, you missed at least 5 of those days. If you're trying to chop and change and get in and out of the market, and the biggest gains happened on 20 days for the entire price cycle, I guarantee you missed 5 of those days. So you missed really big moves, which is why I'm not going to get fancy with this. Money printers turning on. We haven't seen the hodlers take profits. I'm going to remain in my Bitcoin position. And when I trade Bitcoin denominated futures contracts. I don't touch Tether. Fuck Tether. We're in a bull market. I'm not going to touch Tether. And what that allows me to do is I'm always exposed to Bitcoin. It's just sometimes I'm exposed to Bitcoin on leverage. Tepid Luke. Well, hello there. Tepid Luke, longtime supporter of the community. Good to see you, Tepid Luke. B-Man, great show. Thank you very much. Dior Gucci plus ETFs. Exactly. You know, back to the demand side. You know, we have ETF. It's never been easier to buy Bitcoin, and there's never been less Bitcoin to buy. Come on, guys. Why are you bearish? It's never been easier to buy Bitcoin, and there's never been less Bitcoin to buy. Do the math. Thank you, by the way, for sharing all this knowledge. Follow you from Morocco. Oh, welcome. And it's a pleasure to be here today talking with you and the community. Really cool. I want to check out Morocco. I've never been to Morocco. I've never been to that part of the world. I've never been to Europe or Spain. If I go to Spain, I'm definitely going to go to Morocco. I like Moroccan food. Hadn't actually looked at the M2SL chart myself. I'm seeing it here for the first time. Thanks for sharing your thoughts on the cup and handle. Yeah, I don't use the M2SL myself. I prefer to look at it with, through a different lens like this. This is a cool site, by the way. B Geometrics. It gives you some kind of Glassnode level market insights for free. Glassnode's a ripoff. Don't buy Glassnode. I have Glassnode. I use Glassnode, but Glassnode is not for retail people. It's a ripoff. Find your Glassnode information elsewhere. And B Geometrics, very simple, very rudimentary, but honestly, you don't need all these things that you would find on a Glassnode. You need the simple rudimentary metrics. So go check that one out. I don't have a link ready for you guys, but you just Google B Geometrics. It's pretty easy. Can you look at the shorter time frames, like the 3-minute time frames? It's consolidating into a crash. I won't do the 3-minute, but I'll take a look at the 15. 15 is kind of as low as I go. And consolidating into a crash is a bit of an assumption, in my opinion, because we have the consolidation here. So here's the consolidation. Let's wrap it. Let's wrap something around it. It does look dumpy. The characteristics of why I say it looks dumpy is these kind of M's, these M formations. Usually when something's bullish, it's presenting these W's, right? When a consolidation is looking like this, it's showing weakness. It doesn't mean that it can't overcome that weakness. It's just showing signs of weakness. Whereas a consolidation that is bullish is going to typically present more like this. And it can take many different forms, but you get the slowdown at support. The slowdown is kind of the M or the W, right? So we're slowing down at resistance. That's showing that people are starting to put on sell orders. And there's a lot of that. We have slowdown at to resistance. Had a little bit of a W here that resulted in a nice move. We captured that move, by the way. Bot wasn't on, but the trade signals in the Discord were firing, and that was a successful signal. But when I'm in these smaller time frames, I kind of look for divergences, especially when we're in a consolidation like this. So let's get the RSI on. And what are we doing? Are we seeing any divs? Are we seeing any divergences? Let's get the lower end of the range sussed out here. I see what you're seeing. Breaking structure below. Yeah, it could be losing support. It could be losing support. We got how much time till the daily close? 10 minutes. So yeah, we got a lot of catching up to do to get to 58.5 before this weekly candle closes in 10 minutes. It's not looking likely So it wouldn't be a surprise. I think you're right. The smaller time frames are showing a weakness, and it's showing a break and loss of support levels. Couple that with a high time frame close that is bearish, we're likely heading to lower levels. All right, well, I was going to take a look at a few alts, but honestly, it's just not time for alts. Yeah, I'm not even going to bother. There's no point in talking about something that I don't think people should have large exposures to, because I can influence people and I don't like to influence people into altcoins until it's ready. They are good topics of conversation and they make for good content, but content is not everything in this world. And I want you guys to make the best trading decisions you can, which is why I focus so heavily on this chart, this Bitcoin dominance chart. Until this chart starts to go down, don't even fucking try, period. End of story. Like, just keep it simple. Don't overcomplicate things. And whatever you do, do not get fundamentaled. There are a million reasons that you can buy every single altcoin under the sun, and people get fundamentaled all the time. The fundamentals of crypto are incredibly simple, and if you think that they're complicated, you're wrong. I hate to be so frank and brute about it, but the thing that drives the markets is Bitcoin, and the thing that influences Bitcoin the most, is the money printer. So when the money printer kicks on, Bitcoin's going to go up. When Bitcoin goes up, risk on assets are going to increase in demand. When you get an increase in demand on risk on assets, altcoins pump. Simple as that. But it has nothing to do with the fundamentals. It has nothing to do with transactions per second. It has nothing to do with smart contracts, Web3, blah, 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 blah. Insert buzzword here. It's all bullshit. It's all bullshit. It's all about money. Follow the money, follow the flows. And on that note, I think we'll close it out there. So thank you all for joining into the live stream. I'm going to try and get on a little bit more of a consistent schedule. I've been saying that for a while, but when the bull market kicks into full force, it's going to be a lot easier for me to do content. Let me know in the comments below, because I did do a few kind of crypto style videos where he's doing updates on his phone. And a lot of the people didn't like that because it reminded them of crypto, but I'm not crypto. But what I appreciate about crypto is that style of recording and updating a community on YouTube. If you guys appreciate having ease of access so that when something happens in the market, I can quickly go on my phone, doesn't matter where I'm at, on the beach, wherever, at a restaurant, and I can give you guys a quick update. Let me know if that's something that you would enjoy watching. Or if you think it's more important for me to be in a formal setting where I can really dive into the charts and have my full setup and have ease of access to all of the critical information that I think is most important in the market, let me know what you guys prefer. That is all the time I have for today. That is all the time I have for today. So if you guys enjoyed this content, please leave it a like. Don't forget to subscribe. Like the video. I'm not joking. YouTube is weird these days. If you don't like the video, YouTube thinks you don't like it. Even though you're subscribed, you might miss some of the videos. So turn the bell notification on, like the video, share this with your friends, and share Black Box with your friends as well. Get them hooked up on the bot. If they're wanting to dabble into the world of trading, if they're wanting to learn how to trade, get them into the trading community. We can teach them how to trade, or Black Box can teach them how to trade, because Black Box is our trading strategies that have been embodied into that bot. And it's a very profitable strategy that we've been testing for years, and they can learn a lot from it. So until next time, please trade safe. It is jungle out there. Peace.